Now, listen, the Mortgage Bankers Association's August 2023-24 forecast sees the economy slowing towards the end of this year and actually entering a mild recession in 2024, which will see unemployment go up to 4.9%, currently 3.5%. That is, of course, if you want to work. They see inflation coming down. That's what happens when you put people out of work, I guess. And as a result, they don't see the feds raising the fund rate anymore this year. So take a deep breath, guys. You can breathe easy. Or how about this one from the Mortgage Bankers Association's forecast? Quote, despite a picture of cooler inflation, long-term rates continue to push higher, potentially driven by events abroad, along with concerns about the U.S. Treasury refunding and budget deficits. The 30-year rate has moved higher recently. However, assuming the spread between the mortgage rate and Treasury rates narrows as rate volatility settles and the monetary policy outlook becomes less uncertain, and as the U.S. economy slows, we, over here at the Mortgage Bankers Association, expect mortgage rates to decline gradually by the end of this year. So yes, loan officers, rates are going to come down, and soon. Soon enough for most of you. Not all of you though, not all of you. Now, here's the thing, and it got me thinking and wondering over here. I was looking at all of this stuff, as we loan officers do. We pore over reports, over rate movement, inventory, inflation, guidelines, enforcement, and violations. And right now, I'm looking at all of this stuff, and I'm thinking to myself, none of this makes a damn bit of difference to me if I don't do something different myself. My business is not where it needs to be, and if the market would change, and only if the market changes, can I once again regain my footing, recapture my business, and realign my life. Lazarus rising from the dead, the phoenix rising from the ashes. That's what I'll do as a loan officer if only those rates come down. And I'm telling you guys, that's all a bunch of BS, a bunch of hogwash. I'm calling bullshit on myself if I say that. I'm lying to me, Brian. Let me ask you this. If rates come down, what are you going to change? I mean that too. What are you going to change? You see, I'm staying put with what's not working, and I'm not coming off my position until rates change. And once they do, I'm going to be like a grizzly bear coming out of hibernation. I'm just going to be ravenous with my marketing. Or maybe, I don't know, for you, it's not rates that you're waiting on. Maybe it's something else that needs to change before you change. Try this one on for size. According to the Mortgage Bankers Association's 2023-2024 outlook, mortgage origination volume is expected to decrease 26% to $1.7 trillion, with a 15% decrease in purchase and a 12% decrease in refinances. In terms of units, they forecast a 32% drop. This is going forward, guys. And the total number of loans originated, driven by a 20% decrease in purchase loans and a 55% decrease in refinance volume. Meaning, the MBA expects you to write fewer loans and close even less. Is that going to change your actionable plan of attack? It better. You see, here's what I know. If you're waiting for change and you think the change is going to be to go back to what it once was, you're delusional. You're coming off the greatest market ever. If you're thinking change, lower your expectations significantly right now. That's going to help you out. If something has to happen in order to wake you up, it's not going to happen. The change that you're seeing is still degenerating, and when the pendulum actually does reverse course for the better, that turn is going to be slow, gradual, deliberate. Most importantly, it's going to take time. It's going to be massively time consuming. Or to put it yet another way, the change to make the market better is going to probably take longer than the reserves that you currently have in your bank account. The point is this, and it's really quite simple. The time to act was 2 years ago, and every day of indecision since then has been a day late. The only problem with acting today is it wasn't yesterday, and the only thing worse is waiting until tomorrow. And if you agree with my assessment, what's going on between your ears right now might be that you kind of get it. The question you should be asking yourself is, what do you do next? Pods. It's just a different way of thinking. You need to change your vantage point, guys. So we've been working with some loan officers over here for the past few months, trying to navigate these turbulent waters of the market that we have seen disintegrate right before our eyes. And I got to tell you, we are crowdsourcing ideas in a way that I never thought possible. We have some extraordinary loan officers with absolutely fantastic results, each helping each other up make it through these difficult times. And then I got to tell you, there's also a whole other swath of loan officers out there who just don't fucking want it bad enough. I see it and I just have to accept it. That your drive, your gumption, your fortitude, your grit is just not what it takes in order to succeed long term. And that's fine. We're kicking this thing's ass, but we need more people who share the same ethos as us. Fill the information out down below. My team will personally reach out to you.